Andrew McCarthy is interested in more than just a good... Listen, he's having no trouble...
Could you say it again?
He speller in the white...
On your screen.
Said earlier, Steve, undefeated...
You're...
Simple program on therapeutic fiber.
Head to Broadway by way.
The whole project will collapse.
Happy Sunday, guys. Welcome to another episode of CorpoBuzz, where we continue to bring you India's most exciting corporate news in the most fun way possible. Starting with what we promised in our last video, the closest share price for Reliance, which we got in our YouTube comment section, was 1810, whereas the share price actually closed at 1750. So I think you guys need to really work hard on an analysis. So we won't be featuring anybody this time in our video. Better luck next time. And without taking much time, let's start with the action. India's most famous yoga guru launched an alternative medicine drug for coronavirus, claiming huge success during clinical trials. What could go wrong? A lot, it appears. Coronil, a coronavirus treatment kit launched by Ramdev, yoga guru and founder of Ayurveda giant Patanjali, has found itself receiving notice after notice from government departments, a criminal complaint, and a flag from the medical community in India.
Coronil was launched on June 23 with much aplomb. Ramdev added jargon such as clinically controlled to his announcement to lend scientific gravitas to the medicine. He also claimed that there was a 100% improvement in the 280 patients of coronavirus who were a part of Coronil's clinical trial.
Ramdev has been a proponent of Ayurveda, often blaming the West for capitalizing on India's age-old wisdom. He has previously claimed that he can cure homosexuality via yoga and offer a drug to women so that they can conceive a male child. I mean, seriously. But Patanjali, which had an estimated turnover of rupees 25,000 crore, which is approximately $3.25 billion in 2019 to 2020, has found itself in a tangle soon after the launch of Coronil, one that only kept getting worse. Even as stock markets struggled with major disruptions due to the COVID-19-led lockdown, 25 penny stocks have become multi-baggers, surging 100 to 1,240% in last 6 months. During the same period, benchmark Sensex slipped 14%, while the BSE mid-cap and BSE small-cap indices were down 11.42% and 7.8% respectively.
According to an analysis, 161 penny stocks have given positive returns, while 56 slipped in the January to June period. Hathway Bhavani Capital and Datacom Limited saw a whopping 1240% rise in its stock price from Rs 3 to Rs 40.2 apiece. Besides, Opto Circuits India Limited surged 392.71%, Andhra Cements soared 331.16%, and JMT Auto Limited jumped 310.61% in the last 6 months. World's second biggest fashion retailer, H&M, saw the pandemic pummel it to a slightly deeper than expected loss in the second quarter, and said that it was ramping up store closures even as trade slowly emerged from the lockdown hibernation. H&M, which had warned in April that it would swing into a loss in the 3 months through May, said that it had increased price cuts, which squeezed the gross margin, and warned of a high level of markdowns also in the third quarter.
Chief Executive Helena Helmerson said that rapid adjustments to product purchasing and buying plans meant that the stock in trade was able to be reduced somewhat in the second quarter compared with the previous year. However, since there is an oversupply of spring products throughout the industry and the market remains weakened, we expect markdowns in relation to sales to increase gain in third quarter.
With hopes of finding a solution to the ongoing pandemic, Glenmark Pharmaceuticals this week launched the antiviral drug Favipiravir. Interestingly, the shares of the company surged 40% to hit a 52-week high of Rs 572.7 on Monday after the launch of the drug under the brand name FabiFlu.
Glenmark's FabiFlu is the first oral Favipiravir approved medication for the treatment of COVID-19 and has been launched in the few centers. FabiFlu, available as a 200 mg tablet, has been priced at Rs 103 per tablet. A strip of 34 tablets will cost Rs 3,500 to the patients. The recommended dosage duration has been fixed for 14 days, the company said.
However, the company failed to sustain that level as the stock price fell continuously for the next few sessions. The stock now stands at 466.70 rupees, 18% lower than its 52-week high price. With its latest funding round, Indian edtech startup Byju has been valued at a staggering $10.5 billion. It is believed to have raised less than $100 million from US-based Bond, which is a global technology investment firm. This marks Bond's first ever investment in India and Byju's third such fundraising activity in 2020 so far. Earlier in January and February, the startup had raised $200 million each from Tiger Global Management and General Atlantic respectively, both of which are noted investors from the United States. With the close of the latest round, Byju has raised about $1.45 billion in its lifetime from a wide array of leading investors, including Naspers, Tencent, and Whirlinvest.
As of present, Byju has more than 57 million registered students and over 3.5 million paid subscribers. Also, it should be noted that between FY19 and FY20, the firm nearly doubled its revenue from rupees 1,430 crores to rupees 2,800 crores. Great going, Byju.
As the curve gets steeper each day, allowing people to come to office seems even more scary. Hence, most of the companies are still unclear as to when to end the work from home culture. However, seems like many Indian startups are now making work from home the new normal.
That's right. Online used cars platform Spinny has taken a decision to allow 80% of its 500-strong workforce to work from home permanently, said a top company executive. According to its chief executive, Neeraj Singh, the sales, operations, and customer support teams that form 70% of the overall workforce would not be required to be physically present at the office.
Startups have realized that productivity, at least in some of the verticals, can be maintained even by not going to the workplace. Last month, EdTech startup Unacademy was one of the first ones in the Indian startup ecosystem to have announced that 60% of its workforce would be working from home forever. Work from home has now become the new normal and going to the offices is going to be an exception, said a founder at a fintech firm.
Even top tech companies in Silicon Valley made announcements last month about a long-term work from home situation. While Twitter said its entire workforce could work from home forever, Facebook would have 50% of its 4,500 strong employee base to work remotely. Other companies following this route include Shopify and Coinbase.
Allowing remote working comes with its own benefits, including the trimming of real estate costs, which could be a blessing to startups that are looking to save cash during this pandemic. However, there are many challenges as well. While the employee morale may be good right now, the same cannot be expected in the long run. Humans are social beings, and once they go out, see faces, the productivity would rise. What do you think is likely to happen in the near future? Do let us know in the comments section. Till then, bye-bye. See you next Sunday with an even more exciting episode of CorpoBuzz.